Your crypto gains just got bid up by a bond desk, not a crypto whale. Bitcoin cleared $80,000 while open interest fell. Here's why that matters for your portfolio. Tuesday, August 25th, 2026. Today's agenda: Bitcoin cleared $80,000 on a Treasury report. Chips dragged the tape while yields eased. The chip trade is selling ahead of its own catalyst. Today, then Wednesday night, then Friday. But stocks are telling a different story while yields ease. Bitcoin cleared $80,000 for the first time since mid-May. It rose nearly 5% on Monday and close to 3% again in Asian hours. Over the past week, it is up about 23%, the biggest jump in 3 years. The trigger was not a crypto headline because the buying came off a bond desk. Reporting on Monday said the Treasury could tap its general account, which holds close to $1 trillion, to fund bigger buybacks from the 9th of September. Long yields eased on that report because a buyer of last resort changes the price of every long-dated asset. Here is why that reaches you, even if you never touch a coin. The same discount rate sets your mortgage quote and every growth stock you own. Now, the part nobody has noticed. This move came with less borrowed money, which means the character changed. Open interest measured in coins fell from about 353,500 to 312,600, while price rose more than a fifth. That means spot buyers did the work, which is sturdier than a squeeze. The counterweight sits in options, because skew is the cheapest all year, and traders are paying up for upside rather than protection. Watch for daily close above $82,000. If it clears, the next wall is between $88,000 and $90,000, and the risk is a failure here drops price towards $75,000. Now the other half of the story. American stocks finished Monday split down the middle. The S&P 500 lost 0.3% on Monday to 7,652. The Nasdaq fell 0.8% on Monday to 25,980, while the Dow added 140 points to 53,417. Small companies followed, with the Russell 2000 down 0.8% on Monday to 2,995. Chips are the reason for the split. Memory names led the fall, and the main semiconductor fund dropped nearly 3% on Monday, after shedding better than 5% over the past week. The volatility gauge closed just under 16, which means hedges got bid even as the Dow rose. Bonds went the other way, because yields eased once the buyback report landed. The dollar sits near a 3-month low, and gold closed at $4,688, near a 3-month high. Crude went with the dollar rather than the war, dropping 2.5% on Monday, because the sanctions brought timelines rather than teeth. The S&P 500 is still up close to 12% year to date. Read that board carefully. Its engine is falling, while the index stays flat, and the risk is the engine keeps going. Watch for the semiconductor fund to hold last week's low, because if that breaks, your index fund loses its biggest weight. There's a second piece to this. Nvidia has fallen for 7 straight days. Reports arrive Wednesday evening. The market sells into its own trigger. Why? 3 reasons exist. None involve collapsing chip demand. First, weekend reports show Nvidia customers face a price rise of about 15%. This is a margin story for buyers. The cost of every gigawatt of compute goes up. Second, memory names were hit after another Chinese chipmaker filed to list in Shanghai. Micron shed almost 6% on Monday. SanDisk fell further because new supply is the one thing memory cannot absorb. Third, the long end suffers as a rising discount rate hurts a company whose value sits years out. The whole chip complex now sits more than a fifth below its high, marking a bear market. Underneath all 3 is one number nobody quotes. The cost of a unit of artificial intelligence output keeps falling, raising doubts about whether labs buying these chips can meet their obligations. Is this sustainable? The company guided to $91 billion in May, and the street sits near $92 billion, so that revenue line is agreed. Watch for gross margin instead. That is where price rises, and memory costs show up in the fund you own. If margins slip, while revenue beats, expect the peak argument to get much louder by Friday. 2 American data points land this morning. The August confidence survey and July new home sales both arrive after the open, and neither is usually a market mover. They matter to your positioning this week, because they are the last soft readings before the hard one. The rate market still leans toward raising interest rates rather than easing, because the data keeps running hot. Pricing puts a hike at the September meeting above 4 and 10, and at least 1 hike, before the year ends at close to 3 and 4. Survey data running at its strongest in 4 years is the reason. Kevin Warsh has been chair since May, and has cut forward company outlook to almost nothing, meaning the market is pricing the data rather than the speeches. 3 regional presidents already dissented for a hike in July. Watch for that split to widen if inflation surprises on Wednesday. Expect Friday's keynote to be read as a description of the reaction function, because this chair does not tell markets what he will do next. Here is my final read on where we are heading. 3 markers, and the first is in a few hours. This morning brings the August confidence reading and July new home sales. Watch for the confidence number, because a soft print would be the first crack in the survey data that has driven the whole hike story. Wednesday morning brings the July core inflation gauge, the second read on second quarter output and durable goods, all at 8:30 Eastern. Nvidia reports after the bell that same evening. Friday morning, Kevin Warsh gives his first Jackson Hole keynote as chair. Here is my call. I think Bitcoin holds above $78,000 through that speech, because this bid is a Treasury balance sheet story, and that balance sheet is not going away by Friday. Here is what would prove me wrong. If coin-denominated open interest starts climbing alongside price, the borrowed money is back and the floor is thinner than it looks. Watch the long end beside it, because your mortgage, your savings rate, and your index fund all settle on the same 3 days. Bitcoin cleared $80,000 on a Treasury balance sheet story, not crypto hype. Open interest fell, while price rose, showing spot buyers are driving the rally. American stocks finished split, with chips dragging the tape as memory names led the fall. The S&P 500 lost 0.3%, while the Nasdaq fell 0.8. Yields eased on the buyback report, which means your mortgage quote might change soon. Data